Lithium prices may have come off the boil, but exploration activity is showing few signs of slowing. Pursuit Minerals says early drilling at its Minto prospect in Argentina has delivered encouraging signs. To unpack it, we're joined by Pursuit Minerals Chief Executive Aaron Revelle. Aaron, welcome.
Thanks for having me.
Tell us a little bit, this is your first time on Ausbiz, so great to have you on the show. Tell us some more about what you're doing there, given your focus on lithium in Argentina. What are you doing there?
So Pursuit Minerals is an Argentine pure play with our flagship Rio Grande Sur project, which is on the aptly named Rio Grande Salar in the Salta province of Argentina. We've had the project now for about 3 years and taken it from a greenfield prospect to a more brownfield development project where over the past couple of years we've drilled some early holes, established a JORC resource, we've released a pre-feasibility study for a 5,000 tonne operation, and now over the course of the last year we've been progressing that project firmer towards production at a time when lithium prices have rebounded significantly since about 12 months ago when they were at a considerable low, hovering around between 8 to 10,000, and we've seen those prices now reach highs of 30,000 per tonne, and 21 to 22,000 is where it's sitting at the moment. So for us, we're progressing our project with further drilling at our Minto prospect to looking to expand the resource. We've recently acquired some new ground on that tenement, expanding our project footprint, and we're about to release PFS addendums for larger stage 2 production scenarios along with a lithium chloride route, which is very timely given the renewed interest in lithium with quite a few parties looking for offtake supply as the market shifts from surplus to deficit, with a significant deficit expected around 2030.
That where you are in Argentina, I mean, that's a fertile ground, isn't it, for lithium producers? Obviously some of the major players there. Can you just give us a sense of where you are exactly relevant to, or I guess whether you're adjacent to some of those?
Oh, absolutely. So
Argentinian
lithium is quite significant in terms of its global footprint. The biggest highlight is Rio Tinto spending the better part of $7 billion to acquire Arcadium Lithium, which we included within that transaction was Hombre Muerto, the Phoenix project, which we're about 50 kilometres to the east from. We're in a province with Rio Tinto headlining several major operations. There's also Ganfeng, a Chinese lithium major, which is about 50 k's to the north of us with their project Mariana. So we're in a very well endowed region. The Lithium Triangle accounts for around 60% of global resources, 50% of global supply that comes from Argentina and Chile predominantly, of which we're right in the thick of a very well endowed area with significant infrastructure, significant production, and a lot of technical expertise to develop these projects.
So give us a sense then of what your strategy is and prospective timeline.
So for us, we're having multiple strategies, and you've got a project-driven strategy, which for us, we're currently sitting on our 5,000 tonne PFS. We're advancing that for larger scenarios, and we're looking to advance that towards production. So we're having meaningful discussions with potential offtake partners, as well as investors to actually build that first 5,000 tonne facility. We bought that 5,000 tonne number to market for something that we considered a tangible solution with a capex that isn't in the realm of just not being able to be achieved. We wanted something realistic and meaningful that we could bring to market. Conversely, you have a scarcity element within Argentina, as there's 17 lithium salars, no more, no less. If you look at Rio Tinto, for example, 5 years ago in Argentina, they didn't have a footprint. Now they control 3 of the major salars. Within those salars, there is quite a lot of consolidation and M&A activity happening, of which it's only a matter of time before you start seeing major companies, especially within the global top 10, outside of Rio Tinto, none of them have lithium exposure. So there's a real, a lot of M&A activity going on from both majors and also juniors, mid-tiers, looking for lithium exposure given the prominence of the region and where it sits most of the time on the lower end of the cost curve. So it attracts a lot of attention both from a project perspective but also a wider industry perspective as well.
So you debuted 5 years ago?
So we came to market via an RTO at the end of 2022, start of 2023, and that was when lithium prices were in their boom period of about 80,000 per tonne. And from there we've been developing the lithium project since.
So, given that strategy you've got, with that focus on Argentina, how's your funding then?
So at the moment we're sitting on about $3 million in cash. We completed a major capital raise at the start of the year. We also have liquid assets that we're able to increase that cash balance by around $4 to $6 million. So for us, we're well funded. We're not coming to market anytime soon. The only way of getting Pursuit shares is buying on market, and we're looking to continue that strategy. But importantly, we have a lot of news flow coming towards the end of this year. Within the lithium, we've started drilling our first hole at Mito, and we're quite excited for the preliminary results that are coming out of that hole. Our PFS addendums are set to be released into the market over the coming weeks. And more importantly as well, we also have a gold project that we picked up at the end of last year that we're looking to start exploration on that, with drilling set to commence in September. So that within itself is a very prospective, highly fertile ground gold project that we picked up when the lithium market was a little bit lower. But having said that, we're able to run both projects in parallel, where we have multiple value creating strategies across the two.
Where's the gold project?
So the gold project's also in Argentina.
Okay.
So it's in the Santa Cruz province in the south. It's about 100 kilometers from Cerro Negro, owned by Newmont, which is a tier 1 gold project, 5 million ounces at 8 grams per ton. We picked up the gold project as it had a lot of great early stage indicators to be something quite significant. It hosts a silica cap like Cerro Negro. So from our perspective, that project was a great standalone asset, but complemented our lithium portfolio very nicely, given we can advance both projects simultaneously using our Argentine infrastructure and teams in country.
Aaron, very competitive market. In lithium, there are a lot of players out there at the moment. Are you having issues attracting further capital, how do you stand apart from the pack, if you like?
So, if looking at the market now, I think the market is more well educated on lithium, where people are no longer looking just for lithium resources. They're looking for proof of concept and proof of ability to produce. Our project hosts a lithium carbonate pilot plant that's located in the city of Salta. It's produced a 99.5% technical grade lithium carbonate. So we're not just an explorer, we have a validated, proven flow sheet that's produced samples that have gone around the world to potential clients in Asia, in Europe, in North America. And this is a product that is market accepted, a technical grade lithium carbonate, which is the industry benchmark and what a lot of companies are after. So we stand apart given that we have a proven flow sheet, we have a significant resource, and we have a tangible and viable pathway to market, where we're not looking for billions in capex like some of the major operations. It's a project that can be funded by a junior and can be funded to a way that we have significantly de-risked the project through the lithium the lithium samples that have come out of the pilot plant, where we have a validated flow sheet. So it is a point of differentiation from a lot of companies that are still trying to test their chemistry, still trying to test their route of product and what they're looking to produce. Whereas we've come to market with a mainstream product which is getting widespread industry acceptance.